The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 7 August 2026. Well, a lot has gone on this week with gold and silver both showing strength this week, and particularly the mining shares. Some of the mining stocks are up like 20%. In fact, they started going up while silver and gold were actually both finding bottoms. Is this the final bottom? The bottom is in. Many of my peer group think so. It certainly looks that way. I'll be conservative. I've been around a while, and I think there is a possibility that we will see one more big push to the downside before we finally hit the final low for this sequence before we start back up. But time will tell. Is it safe to buy at these levels? I'd say yes. My buying zone for silver is $60 or less. My buying zone for gold is $4,000 or less. Remember the or less. Could silver get to the low 50s again? Perhaps. Could gold get to 3,600? Perhaps. Regardless, I think those values at this level or lower is best. I thought it'd be a good time to go over Bob Johnson's gold sheet. We can see here what's gone on from for the whole year so far. Year to date, aluminum's up about 10%, copper about 14%, lead is down 6%, nickel's pretty much flat. Tin is the big star, and the base metals up about 37%, and zinc follows close second at 23.6%. As far as the precious metals are concerned, this is pretty interesting. Remember, this is year to date, so this went from the first trading day of the year 2026, not what the end of January was, because almost all of us know that silver performed magnificently the first month of the year, January, starting off, as you can see here, at 71.81 on the first trading day, and zoomed all the way up to 120 plus, and then fell off. So from that start, gold is up flat, basically up 0.5%. Palladium is off almost 15%, platinum off about 15%. Silver is off 11% roughly, and the gold-silver ratio is 13% higher. What's interesting is that the XAU is up 7.7 and the HUI is up 7.4. So what we see here is what we normally see in a bull market, which means that the stocks, the underlying stocks, are actually doing better than the metal themselves in this bull market. Lastly, crude is up 33%, as most know. Heating oil is up a whopping 81%. Natural gas is off, and gasoline's up 67%. I've been engaged with a conversation with Bob Gottlieb, and Bob is a well-known trader. He wrote a book recently, Mastering Gold and Silver Markets, Insights from a Legendary Bullion Bank Trader. Bob Gottlieb, he held a senior precious metals trading position at JP Morgan, Citibank, HSBC, Bear Stearns, and Cloud Supply and Trading. I'm into the book. I'm not finished reading it. I plan to finish it probably this next weekend and week, and I will be doing an interview with him. But in the meantime, in a few conversations I've had with Bob, he pointed me to their website called WatchGold.org, and it's quite fascinating, the information you can get off of this website. And I'll be doing more of that. I'll probably be talking about this on the interview. But you can see it's pretty well laid out. You go to the gold price, you can see, you can get some stuff for free. There is a paid subscription at 2 different levels. But on the gold price, you can see gold traded in Swiss francs, the LBMA vault holdings, and of course here's the access levels, which he actually comped me for about a month. A lot of technical analysis here that's available. Macro trends, as you can see, the gold ETF holdings. That's interesting. A lot of stuff on here, but it's really all in one place. To me, it's one of the better websites as far as laying out a lot of stuff in one location and logically laid out, at least in my opinion. So I wanted to bring that to your attention. Again, I'll probably be talking about this website, but I also want to interview him about his trading and stuff I gleaned from the book. I have read the reviews, but the reviews aren't the entire book, which I will do. I've made a point about what the holdings are in the COMEX for several of these videos, maybe 3 or 4 over the last few months. Thought I'd look a little bit more into the LBMA as, again, I think it's important for people to get the correct information. So here we have this again. It's from Nick Laird's site, Gold Charts RS. It is a membership site. And I think this top graph is probably the most beneficial to most of us. So it goes from, as you can see, 2012 to current day. And it's broken out in basically 4 different areas. The Bank of England reserve holdings, estimated, which is this lower light yellow, I'll call it. Bank of England other holdings, which is kind of an orange color. The London ETF holdings, which really for gold are roughly 25% of the total, something like that. A lot of people have the misimpression that it's like 90% of what's held at the LBMA is covering the ETFs. And then, of course, what the other holdings are, estimated float. And of course, this is what, most of us focus on, as they should, which is the available stocks. And that's in this lime green color. As you can see right now, the available float is fairly significant relative to where it's been back in, let's say, 2016, 17, 18, along this area here from really 2013, even where the chart starts. The float's pretty skinny, and then it starts to widen as we go out from around 2020 onward. So that is helpful as far as the amount of gold stocks held at the LBMA, how they are classified, what the totals are, and what the float is. All right, to contrast the LBMA to the COMEX, this is a 1-year change for the COMEX. You can see the legend here. The eligible stocks are in, I'll call it lime green, and the registered stocks are in the darker green. And you can see the trend. It's obvious here that the trend is pretty much down, as you can see. So we've gone from, I'd say a year ago, roughly, I'm going to say around 40,000 to down to about 25. And that is significant. So you could make an argument that gold is leaving the COMEX, whereas I've showed in weeks past, it's really not true for silver. But nonetheless, gold, you can make that argument. And I think it's important, of course. But gold supply, remember, continues to increase, whereas the silver supply ebbs and flows. Sometimes it builds, and sometimes it ebbs. But right now, we've been in a deficit for several years, as we were from 1990 to 2005. This week, I think I'll close out with this, and this is the gold performance from 2015 in different currencies. So dollars, Australian dollars, Canadian dollars, etc., Japanese yen, and all that. So if we focus in on this column here and we look at the performance, we see that gold performed up about 66%, my eyes focus, last year. And if you take that as the last 10 years, you can see that that is substantial relative to other up years. You're looking at, 12% in 2017, 24 in 2020, around 14 in 2023, and 26 in 2024. So I wouldn't call it an anomaly necessarily, but based on 10 years with the data, you can see that gold really jumped last year. We're all aware of that, but I think it's good to put that in the context of a big bull market. As I've said many times, 90% of the move comes in the last 10% of the time. It was a huge move last year. What happens by the end of this year remains to be determined. I think we're probably going to get back to the old highs in gold, over 5,000, and silver probably into the high 80s or 90s. Hard to say. No one knows, but that's what I'm guessing right now. I just want to bring it to everyone's attention because those type of years are rare. And we are, in my view, strong one, that we are in the final legs of this major bull market. My personal study takes on it's probably going to be just a little while longer, meaning a couple more years. Many think it's 10 years to go. Could be. My main argument is, although the dynamics and all do point toward perhaps another decade or thereabouts, that we're going to see a change in the whole system before that occurs. And that's why I'm pretty adamant on the idea that we're going to see the last run to gold over the next couple of years. Again, the market knows more than me. Time will tell. I'll sign out. This is David Morgan of themorganreport.com.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.